Welcome to Trader TV, your insight into trading for professional investors. I'm Dan Barnes. In the Chinese property sector, concern around defaults rose towards the end of last year and that's increased again this year. We're going to speak with Chris Perryman, Senior Portfolio Manager and Head of Trading at PineBridge Investments, to discuss what this means for liquidity and activity in the fixed income sector right now. Chris, welcome back to the show.
Nice to be here.
So in the property sector in China last year, we started to see concerns around defaults. Those concerns have spiked again this year. Can you tell us how is that impacting liquidity and market activity around fixed income securities at the moment?
The initial reaction is just broad risk off. In general, you see a widening of bid offers and a reluctance to bid wholesale on kind of risk. So you need to understand really with the China market is there's a variance of participants. So we've got the private banks in Asia, we've got fast money, and we've got real money. And then you've also got international investors. So private banks have been in and out of opportunities seeking high yielding assets. So liquidity has come back. And then when you get a headline, it disappears again. And so we've been very much headline trading. What real money have been doing, I think, is wait and see, really to look for the opportunities for credit differentiation. I think from our point of view, we're doing the same. There's 50 names in the property area in fixed income. We cover 22 of them. And we would say probably 3 of them are a challenge from a fundamental point of view. And then the others will look to opportunistically add when we see dips or wobbles in risk from kind of ripple effects of a single name. What I would say is it's still a relatively contained event when you consider the headline risk that's around the property sector.
What sort of challenges do you need to overcome and how are you managing those?
The first key is to really understand the fundamentals. So with us, the trade desk really needs to have good connectivity with the analysts, because when risk is off, the risk price you are looking for is really created by yourself, right? And that's not to say we're market makers. We never try and claim to be that. But if you're one side of the risk equation and there's not really any other, you need to understand where you want to take that risk. What we've broken down really is by kind of rating buckets where the opportunities lie. So we think there's good opportunities in the investment grade sector, the double B sector and the single B sector. And we're focused on those names and looking to set targets for ourselves. You know, we've probably got a risk event coming up with Evergrande. There's a coupon payment due on the 23rd of September. I think that's going to create quite a focus. And if they miss that, it's going to create, again, like I said, that ripple effect. And that's what we'll be looking at to differentiate the credits when there's kind of indiscriminate risk off.
Very good. Now, if you're trying to seize those opportunities, as you say, are there any challenges around liquidity? And do you need to look at expanding broker lists, or how do you manage any sort of liquidity issues there?
Our pool of liquidity is sufficient. We probably don't need to expand it. I think what we've got is the mainstream international banks. We've got some China banks, and we've also got platforms. In times of stress, people will tend to try and push liquidity out on any platform or any kind of risk sphere they can. So pure brokers, banks and platforms are where we will look to kind of aggregate where we want to get our risk. And as I say, I think the biggest key for a buy-side asset manager is really knowing the size they want to get in at and what level, and then work with maybe 1 or 2 people to get that risk in. Those relationships are built up over a long period of time, because in stress, that's when you leverage them.
And are there any particular tools or any particular data sets that you're able to use in order to assess the price and the right price you should be coming in at?
For us, we take our data feeds in from the runs that we see normally. And as I say, what we're finding interesting now is the platform data is getting better quality in terms of price point. Real price points where actually trades have gone through is really what we're trying to see, not just runs, which just get moved in and out, not necessarily confirmed by volume.
That's great. Chris, thanks very much.
Thank you.
I'd like to thank Chris for his insights today, and of course you for watching. To catch up on our other shows or to subscribe to our newsletter, go to tradertv.net.